And
Good.
what's up, Cade? How you doing today, man?
Good, Drew. How are you, brother?
I'm doing great, man. Doing great. I'm excited for this initial kickoff of the NGRN weekly updates. How about yourself?
Likewise. I'm super stoked. I think we have some very valuable information that people can kind of take and actually apply in both their investing and real estate portfolios. So I'm super stoked. So to start off, I'm going to go over three metrics. First is the median sales price in all of Southern Arizona right now. Okay, so the median sales price right now in Southern Arizona is $342,000. Okay, so um, if I could show this graph, you'll see 2020 all the way to 2023 right now, and it's been on a constant incline. Okay. Right now, at the beginning of 2023, we're starting to see a plateau. So kind of keep that in mind. For pending sales, so these are sales that are under contract, they're about to close. We have seen a tremendous decline. So right now in the entire MLS, there's 17,000 pending home sales. Okay. Let's go back to January 2022 and we had 22,000, right? So 5,000
Wow.
less homes are getting sold right now or under contract to be sold. And then last metric is the month supply, which is also known as the absorption rate, which is a really good tool to know for any consumer if they're wanting to buy or sell. Because statistically, what the absorption rate is it gives you basically a month's supply, right? So how many months does it take before you can sell your home is really what the metric measures. Okay, so back in 2022 during the summer, like April, we had 1.1 month supply. So you can, out of all the homes on the market, every single home out there, it would take 1 month essentially. Right now, January 2023, we're at 1.8. So we're hitting 2 months, which I can fact check with down here in the Rancho Saudita area. We're seeing homes on average a little over 2 months before they sell. So that's kind of the average days on market. So that is my metrics. What about you, Drew?
Well, first, before we get into that, I really want to ask, so what's like a healthy metric? Are we sort of leaning into a more healthier market in terms of days on the market, or are we heading into a little bit of a dangerous territory?
Yeah. So, good question. And really, what this means for any consumer, right, is that if they are looking to buy right now, they are in a very strong position, right? Because in the past 2 years, what we've seen is it was taking 24 hours, maybe a day or two, right, to sell a home and get under contract. Now we're seeing 2 months, which statistically over time is pretty normal, but it's in no way normal for anyone who's been in the market for the past 2 years, right?
Absolutely.
So if you are a buyer right now, you have the absorption rate in your favor and you have the pending sales in your favor. It means that less homes are selling, which means more inventory is coming on the market. So as a buyer, you have more options available to you. And there's a few points I could go over, but it might take too much time today. But essentially, as a buyer, you're going to be able to get more price reductions. You're going to be able to get seller concessions, and you're going to be more favorable in terms of repair requests when it comes to the actual transaction and due diligence period. So there's just a lot of things going for buyers right now that if you are in the market to buy, it's a really great time.
And I totally resonate with you very well on the fact of normalcy. And we in the stock market and on our end, it's been very wild. It's been a ride. We've had our ups and downs for sure. I mean, 2020 was you could choose a stock at almost random and you'd make money. But then last year it was a significant downturn. However, we are starting to see a little bit more of a recovery. So year to date, going over my three metrics, the S&P last week was up 2.3%, but it's been up 7.5% year to date, which is pretty impressive because
Nice.
that's what investors tend to try to get over the course of a year, and we've seen that in a month. So it's been pretty good. The Dow a little bit less impressive, but you kind of expect that in that. It's only been up 0.3% for last week and up 1.7% year to date. And then the Russell 2000, obviously the more aggressive investor would be participating in the Russell. It's a little bit more volatile. That's been up 3.9% last week, and year to date up 12.05%, give or take.
Wow.
So
So the
yeah,
Russell is a little more of an aggressive index.
absolutely. So it's geared more towards those small cap stocks, the stocks that are a little bit more on the growth side, tech side, maybe that are those startup. They're in the market, but they don't have the big blue chip investor base. So the real retail
Understood.
investor, the people like you and I who are investing in stocks, we can make an impact because you don't have those big institutions like Invesco, Franklin Templeton. They're not buying in and eating up those shares. So
Understood.
yeah, yeah.
So with this data and the metrics you're seeing, Drew, what does this mean for your clients and the average day consumer?
Absolutely. Yeah. So basically, there was a study done, and I always like to reference this because I feel like it's very important, pivotal that the individuals know this, that it's not so much about timing the market as it is time in the market. There's actually a study done where they took three investors and they hypothetically back tested them for 10 years. And what they had them do was one individual was every single time the market hit a bottom, they were throwing in money then another individual every time the market hit a high they were putting money in, and then the third investor it was just on the first of every month they were putting in a set amount of money. Dollar cost averaging is what we call it, right? And what it showed was the differences in their returns. Yes, there was a difference. Obviously, the person that was able to time the market to perfection had the best returns, and the person who always bought at a high didn't do as well. But their returns were negligible, and that the actual true statistic that's super important in regarding the actual return is participating in the top market days. So the days that are the most green. And had you been participating in this market from January to February, this past month, you obviously saw significant returns. And so you missed out on sort of a pivotal time if you weren't participating to actually have seen returns. And so
Mm,
your call to action essentially like what should the consumer do? Well, you should be starting to, if you're not already, inserting those disciplines of making monthly contributions a habit.
that's awesome. And then
Yeah,
I mean, my experience, and I'm sure you have seen, it's all compound interest from there, right? So the sooner
absolutely.
you start, it's really the time you're investing in, not necessarily the dollar amount.
Absolutely, because it's all exponential. I mean, you see all those things on TikTok, right, where they're talking about, if you would invest $100 at 20, you'd have $1 million. Where if you start at 40, you'd have like 500,000. So yes, time,
Right.
power of money is pivotal, pivotal.
Mm.
So
Awesome. I love it. So if you are a consumer in both the financial and real estate world, buyers are starting to have the upper hand, and you need to start putting in on a monthly contribution into the stock market. Those are my two biggest
absolutely.
takeaways.
That's it. That's it, man. And I do want to end on a quote because I think it's super important. So this is a really good Warren Buffett quote. And seeing all these shift in the different markets that we're participating in, it is be fearful when others are greedy and be greedy when others are fearful. And I think we've shifted over into, I mean, you've seen the news that be greedy when others are fearful. So
Mhm. Oh, that's really good. That's really good because
awesome.
that's when people make their most money, right?
That's it. That's it. That's it, man. When the news consistently says recession is on the horizon, that's when you should be dumping money in.
Love it.
So,
Awesome. Drew, well, thank you
awesome.
so much, brother. And I hope this helps, some of our sphere out. And
Absolutely.
yeah, I mean, we'll talk next week.
Looking forward to it. Thanks, Al.